Councillor Perks.
Yep, Councillor Graham Perks, Bednar.
Councillor Debbie Andre.
Good morning, everyone. Councillor Debbie Andre, member of Sandown North.
Councillor Andrew Garrett.
Good morning, Chair. Member of the committee, Councillor for Parkhurst. Andrew Garrett.
Councillor Paul Brading.
Good morning, everyone. Councillor Paul Brading from Lake South.
And Joe Thistlewood.
Good morning, everybody. This is Joe Thistlewood. I'm Technical Finance Officer for the Council.
I'm Councillor Vanessa Churchman. I am chairing the Pensions Committee in the absence of Adrian Axford, who is indisposed, and I'm the councillor for Haylands and the town of Ryde. Thank you. I think we have quite a few other members present. If they put up their hand and wish to speak, could they please introduce themselves so that everybody knows who is speaking? Thank you. I don't think I need anything else. Right, if we now go to the agenda for the 3rd of March today, and first item is to confirm the minutes of the last meeting. I presume you have read them, ladies and gentlemen, and does anybody have any comment to make, please? Or can I sign them as a true record of the meeting?
Move to minutes.
Thank you, in which case I will sign them. We now go on to the next item, which is declarations of interest. Do any members of the committee have anything to declare, please? No. Item 3, public question time. We have not had any written questions submitted, so we will move on to item 4, the investment strategy statement. I would remind people, when you're going through the papers in front of you, that is what ISS stands for. So if you fix that in your mind, investment strategy statement. Joe, are you going to talk to this at all?
I will do a brief overview. Sorry, bear with me. I'm hearing myself as well as speaking, so it's a little bit confusing, so forgive me for that. This is a statutory policy required by regulations and is required to be updated following every triennial valuation of the pension fund and in interim periods if there are any significant changes. The most recent version that's published was updated in January 2019 following the introduction of the committee's investment and governance beliefs, which were incorporated. This version has been updated to fully reflect the changes in the investment strategy allocation that have been introduced over the last 12 months, including the introduction of private debt, infrastructure, and the rebalancing of the equity portfolio to include some passive. The key changes to the documentation compared to the previous version is summarised in Appendix 1, and it is fully acknowledged that there is more work that needs to be done on the fund's ESG, environmental, social and governance, and responsible investment (RI) policies following the training session that we had after committee between committee meetings on the 23rd of February. So the statements that are currently included in the investment strategy statement, Part 6, Section 8 and Part 9 still require some work to be done on them. However, the proposal is that the investment strategy statement be published as it stands, and then as we complete the work on ESG RI, it's revised and updated following that work. I don't propose going through the document in any line-by-line detail or the changes, but I'm very happy to take any questions that members may have at this point.
Thank you, Jo. Do we have any questions, queries or statements from members of the committee, please? Steve Milford, please.
Thank you, Chair. I just wanted to thank Jo for the report and for her work, especially around ESG, which is progressing well now, I think, in terms of our understanding, and also very pleased to see that we'll hopefully be developing a sound policy this year. And also just to note in the risks that it's a positive thing to be saying that ESG considerations, whereas we thought before, or was previous cited before, that these could be a risk to investment returns, that they actually could go either way. It could be a form of investment for us. So I'm pleased to note the progress in that area. Thank you.
Right. Thank you, Steve. I would point out that I've come across one or two articles recently about ESG, and there was quite a big article in the Times yesterday about electric cars, especially hybrid cars. Hybrid cars at the moment are considered more polluting than normal diesel and petrol. So I think we're going to have to be very careful over the next few years when we talk about ESG, and don't try and make everything ESG without looking at the side effects of the, I would say, unintended consequences. Anyway, thank you for mentioning that, Steve. Has anybody else any comments to make about Councillor Garrett?
Yes, thank you, Chair. And I would echo what you said there, Chair, about being very clear that we understand fully the ESG side of things, particularly on in carbon footprint. At the training session, we were taken very carefully through the or my recollection was that the principles of understanding the whole cycle of carbon footprint and the sort of like secondary and tertiary ways in which anything can indeed have a negative impact on our environment. May I just also, because my statistical training, be very pedantic about the labelling of chart 1. It is not possible to have a probability greater than 100%. Probabilities go between 0 and 1, or 0 and 100%. So just some rephrasing is needed there to reflect that. That is a statistical pedant's point, and otherwise I would say this report properly captures what I think the committee has been working on over the time I've been on the committee, and certainly what Mr. Milford was saying. It is really quite refreshing to see certain recognitions in this, particularly around, well, I think the public as opposed to scheme members, although they of course part of the public, will also be interested in terms of how we're looking at those ESG matters. Thank you, Chair.
Thank you, Councillor Garrett. In which case, if nobody else has any comments to make, the recommendation is that the committee agrees the proposed changes to the ISS.
Vanessa?
Yes, sorry.
Barbara wants to ask a question.
Sorry, Barbara. If you'd like to unmute, please, Barbara. Carry on.
Okay, my mute, it keeps going back to unmute, and I haven't got a hand raised function, so that's why I've come on to camera. But I'd like to make a comment on the report, on the consultation section of the report. And I'd like to say that this is the view of the board, because we discussed it at a board meeting on this past Monday. Item 14, on page 13, item 14 highlights the regulation that states appropriate consultation should take place. Item 15 states that the pension board has been engaged in workshops and meetings. in which the proposed changes were discussed and agreed, but it's the board's view that the workshops were presentations to enhance knowledge and not a discussion group on investment strategy objectives or beliefs. And also that the committee meetings, we are effectively what are guests and have a limited, we have restraints on our participation. So the board feels that item 15, calling engagement with the board is misleading and implies consultation. And it's the board's view that we have not been involved in any consultation on this document, and we'd like that reflected for transparency's sake.
Right, Joe Thistlewood, would you like to reply to that, please?
Thank you, Chairman, and thank you, Barbara. I do note your comments. I fully appreciate that this document has not been sent to a formal board meeting, principally due to the timing of all of the activities that have been happening. I would remind members of the committee and members of the board that all decisions in terms of investment strategy, including the policies behind it in terms of ESG and RI and investment asset classes, are made by the committee rather than being made by the board. The board are required to consider the fact that decisions have been made appropriately in accordance with the stated funds policies and the regulatory requirements. I do, as I have said, acknowledge the fact that this document, the investment strategy statement itself, has not been presented to the board for their comment, but board members have been engaged in the discussions of investment classes and have been engaged in the discussions of the investment strategy changes that were discussed at committee meetings, and have had the opportunity to comment on them. But as I say, their role is to ensure that proper process is followed, not necessarily to be able to comment on the correctness or the the appropriateness of the asset classes being selected. So it's really to ensure that the process for the creation of the strategy review has been followed appropriately is the role of the board. We will have a board meeting, formal board meeting, on the 24th of March, and so we will be looking at the way that the decisions have been made by the committee. But I do acknowledge the fact that the board have not been engaged in the consultation on this strategy statement itself.
I accept that the board doesn't have a role in selecting the specific asset classes, but like you say, we do have a role in the process, and that is what we are concerned about.
Thank you, Barbara. If I go to Councillor Barry. Could you unmute, please, Councillor Barry?
Yeah, okay. Just a question, really. What is the committee supposed to take from paragraph 15 then? If this is nothing to do with us, why is that in there? What's the committee supposed to take away from reading that?
Sorry. If the committee could hold on a moment, I just have a query. Do you want everybody to turn their cameras off? Including the committee members? Right, committee members, could you please turn your cameras off if you're not speaking, because we're having slight problems with the streaming. Right, Joe Thistle, would you like to reply to Councillor Barry, please?
Of course, Chairman. Probably the inference is that members of the board have been engaged in all the workshops and the meetings that the proposed changes have been discussed. So members of the board have been aware of the discussions, appreciating, as I say, that the board have not seen the documentation in full. But I do state in that paragraph as well that consultation on changes to the objectives and the development of the ESGRI will be undertaken in due course. I apologise to members of the board if I am implying something that didn't happen. I think the board's point that they have not been engaged will be recorded in the minutes. And we will discuss this in further detail at the formal board meeting on the 24th of March.
Thank you, Jo. I can understand where both Barbara Milton and Councillor Barry are coming from. However, the original idea of the board was to make sure that governance was duly followed. As Jo has quite rightly pointed out, it is up to the committee to actually decide how the funds are allocated. It's a bit of a grey area, but I think, in fact, when you sit down, you should be able to sort this out, because I feel that both Pension Board and Pension Committee, generally speaking, do share information, and I certainly have no problems with everything being shared about, because the more people that are involved, the better the result will be. So I will leave it to Jo to at her next board meeting. Councillor Brading, you have a comment to make, please.
Yes, thank you, Chair. I think Jo is being very gracious. I don't see any reason to apologise whatsoever. I think the answer to the original question was very thorough and very accurate. The board do attend all committee meetings and all the training. You know, whilst we can note their comments in the minutes, yeah, the board have had adequate time to come forward and raise any issues. And I think this is conflicting between what the committee does and what the board does. And I think Jo's explanation to the original question was very thorough. I don't think there's any reasons at all for Jo to make any apologies, which she's gracefully done. I think we've done it right. And in answer to Councillor Barry's question, you know, what do we mean by section point 15? We are engaging because the board do come to all of our training and have time to feed back any comments. So yeah, as far as I'm concerned, the committee has acted correctly in terms of our reference. Thank you.
Councillor Barry.
Yes, thank you. Surely, following on from what the chairman said, surely consultation is part of the due governance. What else would the board function be if it wasn't to be in consultation with the committee on such topics as this we're talking about today?
Councillor Barry, I understand what you're saying. However, as Councillor Brading has pointed out, board members do attend and are always invited to attend the Pension Committee meetings. And, you know, I do feel we ought to draw this to a conclusion, because we could carry on about this for the rest of the morning. But I think your comments have been taken on board. And Jo, as I said, you'll be having a board meeting soon, and I think you can have a further discussion then. Barbara, last comment, please.
I'd just like to comment on what Councillor Brading said. We have raised issues in the board meeting. Those have not been passed through to the committee. And I think that this is reflective of the communications, and I think the board believes that communications should improve. The committee has an open invitation to our board meetings, but we don't have attendance. We attend committee meetings, and I think that as a whole, the board, the committee, and the administrating authority should look at the communications and the flow of information, because I think in some areas it's lacking.
As Chairman Bay, Barbara, I'm afraid I do not agree with you. I think communications across both groups have been pretty good. And to be fair, there has been so much legislation. Not only that, we've had the all this stuff about the 90% and etc. of salaries. The work that Joe has had to do over the last year has been colossal. On top of that, of course, we have access. I think we have as good a communication system as anybody, and I'm afraid I cannot agree with you. However, we will make sure in the future that communication does continue. Thank you. I would now like to move on to the recommendation. And the committee further agrees that further revisions will be brought to the committee following development of a specific ESG/RI policy. Could I have a vote, please? If you just put your hands up.
I'd like to propose that, Chair, if I may.
Right. Could I have a seconder, please?
Second.
Councillor Andre. Is there anybody against, or can I assume it is a decision of all the committee?
Do we not, Chair, have to take a formal vote as previously?
You want me to do a formal vote, Chair?
I think it is important.
Yeah.
Okay, Councillor Abraham.
For.
Councillor Andre.
For.
Councillor Garrett.
For.
Councillor Perks.
For.
Councillor Brading.
For.
Steve Milton. Oh, sorry. No, it's just me, Councillor.
I don't vote. Thank you.
For. Noted. Thank you. We will now go on to the next item, which is scheme changes. This is to receive an update on the words I was struggling for before in the last, when I mentioned all the work Joe had been doing about the 95,000 exit cap and Mcleod. Do you wish to, Joe will give a presentation, thank you.
Won't be a presentation, but it will be a verbal update. So forgive me for talking a lot and wittering a lot. There is so much going on at the moment that it's really important to cover this. I will say, I hope I meant to, and if I didn't, I'm sorry, I will do, circulate the Lga Bulletin 206 last night, which covers a lot of the most recent developments from the Scheme Advisory Board and legislation and regulation. But I will summarise that very quickly by saying that on the 12th of February, HM Treasury issued a revocation of their exit cap regulations, which put a hold on to the 95k restriction on exit caps and the requirement for a immediate unreduced pension, or sorry, immediate reduced pension to be processed. The legislation has now been laid through Parliament and is it's not retrospective, so redundancies between the 4th of November and the 12th of February have to be treated as though they were under the extant regulations at that point, but everything from the 12th of February is back to what it used to be until such time as HMT and MHCLG agree on the future changes. So the changes will happen. The government have noted that they didn't quite potentially implement them as streamlined as they could. So those have been revoked, but it's just a temporary reprieve at the moment. There is more detail in the bulletin that was circulated, and I'm very happy to take any questions arising on that specific matter or move on to the next update in terms of Mcleod. assuming there are no questions, move on to the Mcleod Remedy. On the 9th of February, the central government issued a ministerial written statement on the remedy for the unfunded schemes, so the police, fire, teachers, judiciary, etc. But that does not cover the local government pension scheme, which will have its own remedy and will be treated differently because it is a funded scheme as opposed to the others which are unfunded. The update for the LGPS remedy is expected in mid-March. We don't know what that means at the moment, so we're just keeping an eye on that. In terms of the fire scheme, members will be aware that there will be a new combined fire authority from the 1st of April 2021. And all actions in respect of the rectification of the Mcleod impacts for our fire service members will be handled by the new combined fire authority. The fire pension board meets on Wednesday next week, and they will be discussing this in a little more detail. Other changes that have come through, if you bear with me. The Scheme Advisory Board at its meeting on the 8th of February received the final Good Governance Project report from Hymans. This is the report that's been going on since about February 2020, and their recommendations have been made to central government now as to how this good governance review can be progressed. This includes, as we've mentioned previously, the creation of a single named senior officer with responsibility for the delivery of all LGPS activity, and requirements for additional policies, skills and training requirements for key individuals, including pension fund committee members and Section 151 officers, and the delivery of key performance indicators, a business plan, resourcing and budget allocations. There is a lot of work to come out of this and a lot of things that we do need to consider, and I'm proposing that this is initially touched on at the board meeting on the 24th of March, and also built into the committee's work plan going forward. I note Steve Milford has a question.
Yeah. Right, Steve, would you like to put your question, please?
Yes, thanks, Chair, and thanks, Joe, for the update. I think previously when you talked about Mcleod and the implications and rolling it out in terms of communication to members, I think it was going to be done in tranches, like those most likely to be immediately affected would be told, but those that didn't necessarily need to know immediately could be further down the line. I guess it's a massive job to try and get all that information out. Is that kind of still the plan? And also just a quick question on fire costs. If the council does find itself having to meet the obligations, even though we passed over responsibility for the combined fire authority, do we still have any financial risk to us?
Okay. Thank you, Steve. Good questions. In terms of Mcleod for the LGPS and communications, we are still not sure what the remedy is for the LGPS. So at the moment, we can't communicate anything to anybody other than the statement that's currently on our website that says, we are aware that this is happening, we are waiting for the remedy to be introduced, and then we will communicate. So we do have a plan for communication. We just don't have anything to communicate at the moment. This is going to be discussed also at the board meeting on the 24th of March as part of the administration update. So that will be covered at that point. In terms of the fire service and future liability for that, we are making arrangements to transfer all of our data across to the combined fire authority, and because it is an unfunded scheme, the liability rests in the pot of central government, so there will be no future liability for the Isle of Wight Council financially, but there may be some issues in terms of clarifying data. Again, this is going to be discussed at the Fire Pension Board meeting on the 10th of March, and Matthew Collier from the admin team will be reassuring the board members at both meetings that the necessary information will be communicated in due course.
Does anybody else wish to say anything about Joe's report? I think personally, I'm rather, I don't mean to use the word appalled, but a bit shattered that we are now going to have what looks like to me another management layer. I'm not sure of the point of it.
In terms of the single named LGPS officer, is that your question?
Sort of, but I just don't understand why we're having all this extra stuff put in. I think that's, I don't know if the other members of the committee agree to me. I mean, to me, we run a pension fund, we have access, we've now pulled our stuff, we have the 151 officer is in charge, we have a very competent pensions administrator here, plus help, and I can't understand why we need another, what looks like to me, layer or layers. Perhaps you could clarify, Jo.
Of course, my understanding of the suggestion from the Good Governance Review is not actually to introduce another layer of management. It's actually to clarify the multiple layers that we already have and consolidate them. So at the moment, as you quite rightly said, Vanessa, we've got the Section 151 officer who has statutory responsibility. You have my role, and I report to another person before I report to the Section 151 officer, and my role is on governance, investment and funding. And then you have Matthew Collier and the administration team who report up through the shared services manager to the director of HR, who reports to the chief executive, who also line manages the Section 151 officer, who line manages the assistant director of finance, who line manages me. And all of those people have an input into the operation of the LGPS fund for the Isle of Wight Council. What they're suggesting is that there is a single named senior officer with responsibility. And the structures that are proposed is it could be the Section 151 officer, provided that that Section 151 officer has the capacity, skills and resources to deliver that role. And I've had a conversation with Chris Ward about it, and he has fully acknowledged that he does not have the capacity to manage the LGPS for the Isle of Wight Council. So that then means that we've got to revisit the structure, and we have spoken about this a number of times, that instead of admin reporting over here, governance, administration and funding, governance and investment and funding reporting over here, there is a single point that has the chains underneath it, that manages that reports to the Section 151 officer, that supports the committee, that supports the board, but has sole responsibility for it, not having to go up the chain and then down the chain to get something dealt with over here. So it's a real positive, I think. It is very concerning that it means a fundamental change to our structure, but we did discuss this. It was mentioned at the committee meeting when the Section 151 officer attended, and unfortunately due to other work pressures, that's as far as it's got at the moment, because I haven't had the opportunity to do anything more in looking at the structure. But this recommendation on the Good Governance project, which will then be fed into the MHCLG to implement in regulations, legislation, guidance, makes it a requirement that we do this, and actually puts the governance and administration and management of the LGPS fund in a much stronger position.
Thank you for that, Jo. I must admit, I don't think my goodness, how many years have I sat on the pension committee? I don't think I'd realised just how many, in fact, existing layers there are, and the way you have to go sideways, and in fact you're going around full circle almost. So if this is an improvement, then I'm all for it, and you've certainly made it sound as if it is. Councillor Abrahams, you have a comment or a question?
Yeah, it was, I suppose it's both really. It reminded me of that old song about the leg bone's connected to the knee bone. You know, it goes right the way around, but in fact they're all connected to the spine. So the person who's the spine actually has to be that particular officer. That's the way I said. Once you explained it, I think I do understand it. But it's one of those things that with local government or anything, it just gets so bogged down in the bureaucracy, and it just seems to be so many people. But when you consider the size of the pension fund, you know, it could be open to use. I don't believe in any way, shape, or form that it is. But yeah, if you have somebody, just the one person, of course, one person that we all know is Jo, and we know that she rules it with a rod of iron. You know, I just don't. Will we have to employ another person just to fulfill that role? No.
My hope, and this is possibly inappropriate to say, but my hope is that it's me, and that we can formalise the structure and enable the progress that we've made to continue and blossom effectively. So thank you very much for your kind words of support. And we'll get there eventually.
You know, I meant every word of it. I think, you know, like Vanessa, I have been on the pension fund for quite a number of years in the past, and it's probably, I now understand it better now than I ever did when it was you know, from past treasurers that were involved with it, because I don't think they had the time to actually spend to do it properly.
Yeah. Thank you, Councillor Abrahams, and I totally agree with your remarks, and thank you, Jo, for actually a clear brief on this. Does anybody else have any comments or questions? Otherwise, I will move on. No, right. Right. Item 6, investment implementation progress. Am I correct in thinking that Hyman's? No? Oh, it's you again, Jo. Far away.
Apologies. This is the Jo show at the moment, but we will get there in a second. Can you hear me? Okay. It says my mic is muted. Okay, sorry. There are 3 elements to our investment implementation process that I wanted to talk to you about. Private debt, as you were aware, we have put our first funding into the private debt portfolio with GSAM, Goldman Sachs. We've now received 3 calls for investment in a total of $11.2 million. Which is 28.5% of our total allocation. We are working with GSAM and our colleagues at West Sussex to understand the reporting requirements of this, but this will be reflected in the pension fund's accounts as at the 31st of March 2021. In terms of infrastructure, which was agreed, but we haven't actually completed the subscription for that sub-fund at the moment. We are commissioning a legal review of the documentation using the national LGPS framework for legal services, and it's unlikely that we will put any money into this investment before the end of this financial year. And lastly, at the last meeting, it was agreed that we would move our global asset allocation in equities to split into a passive fund, and I will be honest, there has been no action on that from my part at the moment. But really just for members to note, and I think Emma may have something to add at this point.
Right.
No, just to say that
Far away,
Just to
Emma.
say that we have been in touch with UBS. We now have all their onboarding documentation and processes, so we can pass that to you, Joe, and that will feed into the transition plan. Because there's quite a lot of restructuring, Hymans will prepare a note exactly what's going where and the costs involved and the timescales for that. So we're in the process of preparing that now that UBS have provided us with the documentation.
Thank you, Emma. Do you have anything else to say, Joe?
Unless members have any questions on the investment implementation, I'm happy for members to note the presentation and then move on.
Any questions, queries from the committee? No. So do we need to vote on this? No, we just accept your, no. In which case we'll go on to item 7, investment performance and indicative funding level as at 2020 December. Now, Emma, over to you.
Comes over to me. Thanks. If you skip on to the Hymans produced investment monitoring report, I'll give you a brief update on markets over Q4 and the quarter to date and what impact that has had on the fund, both from an investment perspective and from a brief funding perspective as well. So over Q4, the last quarter of 2020, markets did respond positively to major events. The two big things that happened in that period was the US election and positive news of a vaccine rollout. Both of those events caused risk assets like equities and corporate bonds to rise in price over the period. So it was a strong quarter for investment returns amidst positive economic news. Global equities rose 8.5% over that period alone, and year to date they're up 13% in total. So up double-digit figures despite the falls that we saw in March due to the COVID pandemic. UK equities do still lag global equities, but they made up a lot of lost ground. They returned 12.6% over the quarter, so significantly ahead of the global market. But year to date, they are still down about minus 9.8%. So they were down double digits, but the UK have clawed back some of those losses we saw in that year. And that's primarily for two things. One, the UK was quite at the fore and one of the first to roll out the vaccines, and that has a positive impact on the economy. And also they had the UK market in general has high allocations to things like oil and gas and financials, and those were the sectors that performed most positively over the quarter in response to risk on market sentiment, i.e. people thinking things are going to get better for the economy. And government bonds and corporate bonds also rose in value. So you kind of had broad all asset classes rising. And what that means in terms of government bond prices rising is that yield that you get on them, the interest paid, it fell, which slightly increases your liabilities. But overall, your assets performed strongly enough to counter that increase in your liabilities, which represented overall a positive for your funding position. UK property still faces a headwind, but you did get positive returns from property as well. So that's a general market background for Q4. Most asset classes returned positively, which has impacted on your total fund performance. On page 4 of our Hymans report, you've got the capital market outlook, and that's our research team's view on all your asset classes that you're currently invested in. And the key takeaway from this page is that everything looks expensive. Most asset classes are fully valued. It's very hard to find good value assets in the current environment. With the exception of infrastructure, everything is either rated neutral or cautious, with infrastructure being neutral to attractive. So while sectors like airports and toll roads have really been negatively impacted with the lockdowns we saw over last year, essential services like utilities and social infrastructure remain in very high demand. And you are going into infrastructure later this year, and that's the sorts of considerations that your investment manager will take in when they are seeking projects to invest in. So what does that mean for the fund? If you switch on to slide 6, you'll see that the Isle of Wight fund returned in total 6.9% over the quarter, and that's versus a benchmark of 6.3%. And your total fund value is now 685 million. So you're broaching that £700 million mark. It's really increased in size over the last few years, and you are considerably ahead of benchmark, both over the quarter and over the longer term. The bottom left chart on page 6 of our report shows the fund's return over different time periods versus the benchmark, and then the relative outperformance. So the fund has done really well in outperforming its strategic benchmark over all those time periods considered. On to slide 7, there's been no change to the ratings of your managers. They're all still rated positive or preferred. There's been some more personnel changes at Newton. Oh, thanks, Joe. Page 48 of the full report pack. There've been more personnel changes at Newton with an appointment of a new CEO and who has come from Aviva, and we are keeping this rating on watch as we see these changes embed. This is one of many changes that have happened at senior levels within Newton, and we want to keep a close eye on how that does impact the manager as a whole. We have touched on that as part of your equity review strategy, and some money will be coming out of them to fund the new UBS allocation that you have agreed to. So just diversifying the managers you've got there to reduce the risk that you have to any one manager. There's a couple of changes at Schroders as well, but they're not particularly material. We're still rating them in positive and we're not putting them on watch for now. So that was Q4, and I'm conscious that I did give a small Q4 update at the January meeting. So things have moved on since then. So we're in 3rd of March already this year, and the quarter to date so far, equities are still posting positive returns. So quarter to date, they've up about 3 or 4%. UK and global equities are broadly matching each other, and it's been boosted by further fiscal stimulus. You're finding that governments from major economies are still supporting the economy, still pumping money in, still have things like furlough schemes which might have been extended, etc. So when they finally get pulled back, we'll really see the impact that that will have on major economies. In contrast to Q4 though, UK government bond prices have fallen, and that yield you're getting on them therefore has risen, which is a positive impact on reducing the value of your liabilities. Again, because you're discounting by a bigger number. So as the government prices have fallen, this is based on positive economic outlooks. People think things are going to get better and lockdown restrictions are going to be easing. This is getting priced into assets. And so the value of your liabilities has fell over the quarter to date. And as at the 2nd of March yesterday, we estimate your funding position to actually be 100.8%. So just back up to that 100% mark that you were just before March when everything kind of fell off a cliff with the pandemic. So that's on an ongoing funding basis. So you're back up at that fully funding position, and it's about maintaining that steady state going forward with your investment strategy. Obviously that will bump around a little bit as yields move. But that was really all I was going to cover, both over Q4 and the quarter to date. Everything's positive from an investment perspective and both a funding perspective. So it's steady as we go into managed volatility that we might experience over this year will probably be your biggest area of focus for your investments, and also getting into your new asset classes that you've agreed to go into. Any questions?
Yes, I have a question, Emma. Where does the Chancellor keep finding all this money? Are we just printing money, or is there anything to back up what the trillions that have now been issued, if you like?
So there is an element of quantitative easing, which is essentially borrowing money or creating money, which will then need to be paid back at some point in the future. So that is something in terms of the long-term economic growth that you will need to consider. Yes, the economy is being propped up just now, but at what cost, and how long will it take for it to recover? That's likely to be numbers of years into the future.
Councillor Abrahams?
Yeah, I think money and time are both the same. They don't really exist. It's incredible. You know, all this money that keeps appearing from nowhere, from the magic hat. Yeah, just one thing. How many pension funds are in this same position as we are, or is that difficult to say?
Within the public sector, yeah, comparable to the public sector. You are, I would say, probably in maybe the top quarter of funding positions from the public sector. Your pension scheme, most public sector pension schemes have broadly similar levels of investment strategy and investment strategy and funding level. They're all there or thereabouts, but I definitely think you're in one of the better funded schemes. We actually produce a report annually that compares the funding position of all public sector LGPS schemes, and I can share that around with you, but you're definitely probably better than average, I would say.
That's good to know.
Thank you. Steve Milford, you had a comment or a question?
Thank you, Chair. Yeah, thanks, Emma, for the outline there. Absolute great news that the fund value is now 100%, so that's really good. Just a kind of question, really. Well, firstly, an observation on the amount the government's borrowing. In a sense, I suppose, although it's massive, it doesn't matter too much with historically low interest rates. But could you just comment on the possibility that we are going to be in a scenario of actually having negative interest rates and how that will affect things?
Yeah, absolutely. And negative interest rates are a real risk. The biggest risk that poses to the fund is, one, returns on your investments are likely to be even lower. Two, if you go negative interest rates, that will have an impact on your funding position because the amount that you're discounting your liabilities by will increase even more. It will change the value of your liabilities, it will increase them. So you might see your funding level drop if we do get to a space where there's negative interest rates. We've done quite a few publications on this now and some research which I can circulate to the committee outside of this, but it's something that we'll need to discuss with the actuary of the fund as well, whether you want to reflect negative interest rates, because it is likely that negative interest rates will be a short-term thing and you fund your scheme on a long-term basis. Is it likely that negative interest rates will be over a 20-year time horizon, which is what you set your contributions and discount rate over? Unlikely. So whether that's actually reflected in the fund valuation is yet to be discussed. But yes, lower investment returns and possibility of increasing your liabilities due to the change in your discount rate. And that is a real risk facing the fund. They're already so low, they're basically zero. So there's not much further for them to go unless they do go negative.
Thank you. Councillor Perks.
Just like a comment, and it's a partially question. It's up in the city, work goes on, and it's a lot of it is hand in glove with people that you know, and you tend to take advice from others that you think, oh, they're good people. So we go along with that. I notice you've taken on somebody from Aviva, and previously you had somebody that was recommending SSE services, Southern Electricity, Scottish, etc., etc. But I don't seem to hear anything about investing in, being as we're now out of Europe, I don't hear anything about investing in British companies, UK industries, which are going to be a growing market, because we're now going to be trading with the rest of the world, which we haven't done for some years. And a lot of negativity comes through. And I'm not that old, and there's people a lot older than me around that remember we've gone through 2 world wars and we bounced back, we survived. We reinvested a lot of money in Europe to help them through the problems that they had, and we still came out on top. And it does sicken me a bit when nobody seems to be backing Britain. And I think our pension fund should be looking to invest in more UK companies based in England or Great Britain, the UK, and employing UK residents. That's my comments. And have you got any plans to do so? Thank you.
So relative to the global economy, you actually have an overweight exposure to the UK, quite a significant one. You've got a purely dedicated equity mandate with Mcleod that focuses only on UK equities and UK companies. And if on page 5 of the report, you'll see that that's actually worth 130 or 150 million. Then within your other mandates, although they are global equity funds, they can still allocate to the UK where they see value. And in particular, your Schroders property fund, again, that is full UK commercial property. And your fixed income fund has an allocation to both government bonds within the UK and corporate bonds. And then also your Baillie Gifford fund will have a small allocation to the UK. So actually the vast majority of your assets are focused in the UK. When we looked at your equity strategy more thoroughly a couple of meetings back, we looked in the round at the level of risk that you're facing within your strategy. And whilst, yes, you do want to back the UK, you have to diversify your risk. Whilst you might feel that the UK is in a great position to benefit, there is also the risk that it doesn't, and it's about spreading that risk as much as possible as opposed to investing with your gut. And what what the committee's job is to set that investment strategy and let the managers assess where the value is in those companies. And if the managers feel that particular companies in the UK offer great value over the long term, they're the ones that are in the best place position to then invest in that on behalf of the fund. But you do still have a dedicated allocation to the UK, and most of your credit assets are UK focused as well.
Thank you, Emma. I'm quite pleased to hear that. I'm sure you are, Graham. Is there anybody else who would like to ask a question or make a comment?
Could I just come back quickly?
Yes, Councillor Perks.
Okay, well, it's and I appreciate exactly what you're saying, but I would like to see more scrutiny covering which companies we're investing in, and which ones are solely owned by UK companies, and not, as in a lot of cases, Spanish companies, all over the world. We should be investing in this country, in the United Kingdom, and in a big way to UK owned and set up and staffed by UK residents. Thank you.
All I can say, Councillor Perks, is that this will be taken on board, and when we have our ESG sessions, etc., because I'm sure most of our members would agree with you, it just, at the end of the day, how practical it can be. And as Emma has said, we do have to spread the load. Does anybody else wish to say anything? Councillor Andre.
Thank you, Chair. Yes, if I can just come in there. I think Emma gave a very, very good sort of overview of it has to be part of our strategy. I do appreciate Councillor Perks's sentiment, but our overall strategy here has to be to maximise our yields, our returns, and I'm very confident from Emma's explanation that it is part of our overall strategy that, where possible, we will invest in UK companies. I mean, as Emma said, we're already through Mcleod, we're overweight on that. I think it's also valid that even if it's a company that is perhaps foreign owned that invests in the UK, that is still providing jobs and employment and still contributing to the UK economy. So I think that we have to take a balanced overall view, and I'm confident that that's exactly what Hymans are doing for us. So I do appreciate the sentiment, but we do have to look at our whole portfolio in a balanced way. Thank you.
Thank you, Councillor Andre, and I agree with you. And don't forget, when we have a successful British company, what can and does often happen, it gets sold to an overseas investor, in fact, to another overseas pension. I think Red Funnel is part owned by Canadian Pension Fund. So there's this problem of you are successful and you can be acquired by somebody outside of the UK. If nobody else has anything to say on that, thank you, Emma, for, I presume we have finished that section. We can go on to Lisa's looking for her agenda. It's fallen on the floor. Items circulated for members' attention. Oh, by the way, Emma, if you do leave us, thank you for your participation. Much appreciated.
Thank you very much. I'll stay on for the work plan.
Thank you. Item 8, the item circulated to committee members.
Just a very quick overview on that. There is a lot of information being circulated. There's a lot of things going on. I think we've established that earlier on in the meeting. What I would raise members' attention to is that there's quite a lot going on in respect of ESG issues. There was an article in The Guardian from Friends of the Earth, I think it was in the Times as well, about the LGPS in general reliance on fossil fuel investments. And as a result of that, it's prompted a couple of queries into to my inbox, one via Councillor Chapman and one from Frack Free Isle of Wight, just asking what the pension fund, the Isle of Wight pension fund, is doing in terms of fossil fuels. I'm in the process of drafting up some proper responses to those, and I will share that information with committee members and board members. But as we spoke at the workshop on the 23rd of February, we will be commissioning some work from Hymans to look at the existing carbon footprint of the fund and developing our reporting, monitoring and establishment of our responses to climate change issues, etc., etc. What I would ask members, please, is if they could submit the feedback forms that I emailed from the workshop that was asking also for input into whether members would be interested in forming part of effectively a subcommittee to look at ESG RI issues. So I won't dwell on that anymore at the moment, but if members could feedback from the ESG workshop, that would be very helpful. And simply just to note the items that are being circulated, but I'm happy to take any questions if members have any.
Could I ask, do any members have any questions or comments? I've just one small comment. Fossil fuels, obviously they are certainly beginning to be less used as we appreciate and understand the damage they have done and will continue to do. However, again, the law of unintended consequences, the Times published an article saying that electric cars had to run for 50,000 miles, which is probably the equivalent of 8, 9, 10 years, before they were in fact carbon efficient. The reason being, you have to build them, you have to supply the electricity, you have to get rid of existing cars, etc. What do you do with them? So, you know, beware. And as I keep saying to people, the West Wight rely on oil for an awful lot of their heating. So you have to phase things out carefully and at a reasonable pace if you do not wish to damage other areas of not only the economy but of our lifestyle. I've just wanted to add that in. Thank you, Joe, for that. Any other questions, comments from the committee? If not, we will move to the work plan.
Thank you. The work plan begins on page 63 of the report pack, basically summarising, again, still at quite a high level, the work that is going to happen over the next corporate year and beyond in terms of committee meetings and dates. The papers for the Access Joint Committee meeting to be held on Monday have been received. They are 118 pages long, and I will circulate a copy of the agenda at the very least to you, members of the committee, with hopefully a bit of a briefing note. But we will have a feedback from that at the next committee meeting. Members will note the last ever meeting of the Isle of Wight Fire Pension Board on Wednesday next week, following which the Combined Fire Authority will come into force. There will be a Combined Fire Authority Fire Pension Board, and 2 of the existing Isle of Wight representatives on our local fire pension board will be on the combined fire authority board. The board meeting, the local pension board meeting on the 24th of March will also be looking at governance review and also considering the strategies and policy documents that we currently have in place for the fund, and looking at a timetable for their review and updating and making sure that they are current. So that will add to the work of the committee as that develops from that process. The other thing I would point out is that we are still able to hold a pension fund committee meeting on the 28th of April, even though it is within the pre-election period, because the monitoring officer has confirmed that this is not a political committee. They are not made, decisions that are made are not politically biased. They are for the benefit of pension fund members, so that meeting can go ahead. So please could members be aware and keep that meeting free in their diary. Otherwise, as I say, the meeting will, the work plan, sorry, will continue to develop, and we do need to factor in elements of development workshops that will flow as the work plan developments throughout the year. I'm happy to take any questions from members that they may have.
Sorry. Oh, sorry, Emma.
Just one quick one for me. In order to improve manager engagement, you might want to consider scheduling manager presentations into some of these meetings from a responsible investment perspective. It's just something that you've committed to do within your strategy statement.
Thank you, Emma. Yes, that has been noted and will be activated. Thank you. Does anybody else have a comment or a question? We now have members' question time. Does anybody have a question for either Hymans, Joe, or myself? No, in which case I think I can declare the meeting closed at 11. No? Oh, sorry, we're going into the private. Of course we are. I do apologise. Yeah, of course we are. We're now going on into agenda item 12. And of course we formally exclude other than committee members, Joe? No. Board members and committee members are entitled to say, and we say goodbye to Emma. Thank you.
Bye everyone. Thank you.
Thank you.
Sorry to be a pedant on this, Chair, but do we not actually have to formally agree that? We actually have to pass it as a motion?
Do we, Joe? Yes. So we have a motion. I will propose the motion that we exclude all but committee and board members. Could I have a seconder, please?
Seconded.
Right, and if I go through the list, I have to go to the front. Councillor Andre. For. Councillor Brading.
For.
Councillor Abraham.
For.
Councillor Garrett.
For.
Councillor Perks.
For.
And myself, Councillor Churchman, for. Right. In which case, thank you for that, Andrew. Which case we now go to agenda item 12, which is the investment consultants.
Sorry.
Right.